Hi, everybody. My name is Richard.lesperance. I go by the name of my man Richard. Welcome to A Better Lifestyle. Today, I have the pleasure to have once again on my podcast Adrian Reid. Welcome, Adrian.
Hey Richard, how are you?
Great, great. Today it's part two of our series in regards to trading. Last time we were talking about the difference between trading and day trading. Today we're going to go a little bit more advanced. We're going to be talking about systematic trading. So, for people who don't know, you guys are going to learn something. So, Adrian, tell us what is systematic trading?
Yeah, thanks, Richard. So systematic trading is essentially trading where everything you do is rules based. So you have, I call it a system. It could be called an algo, or it could be called a strategy, depending on who you are. And it's a set of rules that tells you exactly when to get in, exactly when to get out, and how much to buy and sell each time. And the purpose of this is to take the emotion out of your trading decisions. If you have rules that tell you exactly when to get in and when to get out, it eliminates a lot of the problems that most people have with trading, which is the emotional side of it. People have FOMO, they have greed, they have fear, and this gets in the way. But if you have rules, a system to guide you, it really helps you become profitable and consistent much more quickly.
And why did you go that route?
Well, I like most people, I think when I got into the market, I tried lots of different approaches. I tried buying companies that I'd heard of where I used the products. I tried buying companies with strong fundamentals. I tried looking at charts and indicators. I tried taking advice. I tried all of these different things. And for the first 3 years of my trading journey, my account just went down, 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 just slowly. I was always very conservative, so I didn't lose big money, but it was just kind of a slow decline. I was just losing money gradually. And it was really frustrating because I was spending a lot of time on my trading, research and trying to come up with my decisions and signals for the next day. And eventually I got to the point where, I'd spent 3 years doing this. I still wasn't profitable. And I was kind of at the point of, do I throw in a towel or do I just like really double down on this and like throw myself into the research? And at that point, I decided, look, I really like the markets. I enjoy it. I want to make it work. So I just amped up my reading. I started reading more and more books on different strategies. And the book that really changed everything for me is called Market Wizards. And Market Wizards is a series of interviews with professional traders. And I read those interviews, and as I was reading through them, I sort of reflected on the person and what they were doing, what their life was like, what their skills were like compared to me. And I basically went through this book of interviews with all these different fund managers, and I just basically crossed them out. I can't do that. I don't know how to do that. I don't want to do that. I don't want to live like that. And I just narrowed down all of the different approaches. And the one that really stood out as resonating with me was systematic trading. And the reason it resonated is because those people had the best lifestyle. They didn't actually spend very much time on their trade. They spent a lot of time on research, but not a lot of time staring at the screen trading. They seem to be the most calm. They seem to have the best balance. They seem to be the most diversified, and it resonated with me. And so when I discovered that and I'd essentially eliminated all the other methods of trading that I didn't want to do, systematic trading was left. And so I just took my research deep on systematic trading and learned everything I could about that and started building my own trading systems. And that's kind of where it took off.
From your knowledge, do you know if there's a lot of people that use that system?
Look, there's a Yes, look, I would say there was a lot of people that trade systematically, but if you compare it to the number of people that just buy and sell stocks on a whim or based on hunches or based on advice and tips, that number is huge. And then there's a number of people who trade with some sort of technical rules like chart patterns and indicators. And then even smaller is the number of people who actually have a proven tested system, kind of like what I do. So yes, there's a lot of people that do it, but compared to the number of people who dabble and gamble in the stock market, it's a very small niche.
So you've created systems in the past using computers, or with just like your basic knowledge of the market and experience?
Yeah, it starts with the basic knowledge of the markets and the indicate like technical indicators, technical analysis type stuff. I use things like breakouts and moving averages and Bollinger Bands and some typical indicators that people who are technical traders would be familiar with. The systematic side of it comes in when you take those rules or those indicators and you combine them into a complete set of logic that tells you exactly when to get in and when to get out. So those rules, I mean, they don't have to be systemized, but you'd be a bit nuts not to not to no sorry computerize. You'd be a bit nuts not to computerize them in this day and age because once you've figured out what your system is going to be, you can put it into the backtesting software, which applies those rules to all of the historical data in the market, so all of the market history, and you can test your rules to see, when would they have bought, when would they have sold, and you can see how profitable or unprofitable that strategy would have been over time. So you start with the basic rules, you combine them into a complete set of rules that tells you exactly when to get in and get out. Then you test them. If they're profitable and stable and robust, which we can talk about in a little bit what all that means, then you can deploy them with real capital. And I did this manually originally. So I was generating the signals with my trading software and then placing the trades manually with my broker. But nowadays it's all automated. So my computer generates the signals, it talks to the broker, it places the trades. And actually that's far easier nowadays than what it sounds. It's you need the right tech in place, but it's very accessible to the average retail trader.
So if someone who's not too tech savvy, can they do it?
Look, I would say you need to have some sort of comfort with technology. You don't need to be a computer coding guru, for example. I have many students who weren't coders but are comfortable with, spreadsheets and formulas and, some basic math and happy to use the computer and to figure things out. As long as you've got that sort of analytical approach about you, then this is quite an accessible style of trading. If you're someone who really doesn't like computers, is scared of them, hates math, it's not the right approach for you. But if you're an analytical sort of person, then yeah, absolutely. You don't have to have all of the deep tech skills though. You can learn those.
So where would someone, if they want to learn, where would they learn that?
Well, I would start with reading books about systematic trading. So there's quite a few good books on the general principle. One of my favorites is Way of the Turtle by Curtis Faith. Another really great one is Trade Like a Casino by Richard Wiesman. Two really good books on the topic. They're futures focused traders, so their books reflect that. I trade stocks, so my approach, I've adapted kind of some of their philosophies and a lot of my own stuff to apply this in the stock market. But that would be a good place to start. And a basic understanding of technical analysis, indicators and those sorts of things. So that also helps. And really, that's where you start your research. And then ultimately, if you want to learn quickly, do a course, get a mentor or something like that.
I guess also they could find that information online too, right?
Oh yeah, absolutely. I mean, if you go to, I mean, if anyone wants to learn about systematic trading and goes to my website, enlightenedstocktrading.com, I've got hundreds of articles about different aspects of systematic trading. So that's also a good place to start if you're interested in systematic trading of stocks. I talk about the psychology of it, the risk management of it, how systems work, different styles of systems, a lot of those sorts of things. So if you're looking online and you just want somewhere to start, go there. You'll learn a lot of the lingo, and then you can start googling around and find some useful resources once you know some of the basics.
So before you found the right system for you, how many times did you try different systems?
Yeah, good question. I My trial and error was mostly happening before I really went systematic because I did all traded on tips and traded on broker recommendations and fundamental analysis. And then I came to technical analysis and I was starting to find some some rules and some types of trades that I was trying to catch on a regular basis. So I had sort of started to form some rules. It just wasn't a complete system yet. And around this, just before I found systematic trading, I found trend following. And trend following is a strategy, it's a style, type of system where you buy stocks that are going up and you hold them while they keep going up. You give it a lot of room to move. And if it turns around and really starts going down, like 20, 25% down from its peak, then you sell. And trend following is great because you don't have to do a lot. You find stocks that are going up, you buy them, and then typically you hold the winners for a long time, months and months. And the losers hit your stop loss very quickly. So there's not actually a lot to do day to day. And I was settling on that as a strategy. And then I found systematic trading, and I thought, okay, well, I need a complete set of rules, a system to catch my trend following trades. And then that's kind of the first system that I launched. So I was lucky that when I found systematic trading, I had already found the strategy that I liked, which was trend following. And so my first system that I built was a trend following system. It worked. It turned my account around and started my equity growth rather than decline. Um, but it had a lot of problems. I still had a lot to learn, but it did make money and it did help me grow my account. So I was pretty fortunate that I sort of found those two things at about the same time, trend following and systematic trading. I combined the two together, and I ended up with a system that really worked for me.
How long do you think someone should test their system before they say, okay, well, that's not working?
Well, yeah, good question. So there's a couple of different types of testing, right? So the first and I think the most important place to start is testing on historical data. And so when I've got a new system that I want to test, or I'm thinking about trading, or I'm designing a new system, I'm testing that on a lot of market history. So typically it's pretty easy to get good data back to 1990. So I'll test my systems from 1990 all the way up until today. So the historical data. So I've got several decades of history, thousands of trades over thousands of stocks. So I've got a good chunk of historical data to tell me whether or not that strategy worked in the past. And there's quite a lot to the testing. It's not as sort of simple as it sounds. You've got to test the rules that you're trading and then vary those rules and make sure the strategy still holds up, and then look for outliers and things that could be messing you up. It's a lot more detail than probably what want to get into in this conversation. But that process, once you know how to do it, it takes me several hours to do it, but the first time someone does that testing and analysis, that could take weeks and weeks to kind of muddle your way through, and then you gradually get better and better at it once you know how to do it. So now, if I've got a new system idea, I can kind of write the rules, put it in the software, spend a couple of hours testing, and know, am I going to trade that or am I going to throw it away?
Uh, is the system that you have, does it work in all markets?
No, well, look, markets are different. The Australian market is different to the US market, is different to the Canadian market, is different to the Hong Kong market. They're all stocks, right? But the exchange rules are a little bit different. The market participants are a little bit different. The industry sectors are a little bit different. So there's quite a few little differences that add up to some fairly substantial behavioral differences. Yeah, Australia has got a lot of minerals resources exploration stocks. So does Canada. So there's some similarities in the way they move. The US has a lot of really big stocks in comparison to our market. And so if I take a set of rules from, say, the US market and apply them to the Australian market, they might work, but they're probably not going to be ideal because the characteristics of the market are different. But you can take the generalized strategy like trend following, and you can adjust the precise rules to work on several different markets. So one of my core systems that I've traded for a long, long time, I've developed, and other students have developed versions of that for probably over a dozen markets around the world that it works for. But the rules are all just slightly different, it's a bit tweaked here or there because the personality, the behavior of each market is a little bit different. Yeah.
So it would be also different from if you're selling if you're trading stocks or forex or the other
Yes,
asset classes.
yeah, the different asset classes are quite different. So a system that works in Forex wouldn't necessarily or probably wouldn't work in stocks and vice versa. If you think about the currency markets, there's fluctuations and they can look fairly big on the chart, but generally a currency won't go from one to 1,000, right? But a stock could go from one to 1,000, right? $1 to $1,000 over many years, obviously, not instantly. But for a currency, unless there was hyperinflation in some tradable currency, that would be unheard of. So, typically, a currency system is probably shorter term. You're probably using more leverage carefully, and the nature of the moves are fairly different. Similar with futures, some futures are very trending, so they kind of behave a bit like stocks. Some futures are, they sort of oscillate around some sort of long-term fair value. So it's going to differ fairly substantially depending on the market if you're trading across different asset classes.
So what if there's a big crisis in the world? How do you do you reevaluate the system, or do you make changes, or what do you do in that case?
Yeah, so the way I manage it is I have systems that profit from different types of market behavior. So I have a strategy which will profit when there's a smooth long-term uptrend. I have a strategy that will profit when a stock or the market is quite volatile and bounces around. And I have a strategy that profits when the markets are falling. And I've got many such strategies. So it's not just one system. There's many systems in a portfolio together, and each system gets a little bit of your capital. And the system that makes money when the market is going up smoothly is only on when the market is going up smoothly. When the market is going down heavily, it's off, it's in cash. So it's not actually invested. And some other system is turned on. So the systems contain rules that tell them when to turn on and off because they can or can't make money. Yeah. So there's no point buying stocks hoping they'll go up in a really heavy down trending market because you're going to make much more money much more quickly if you short sell rather than hoping the stock is going to go up. So the trend following system that makes money when the market goes up has a rule that stops it taking trades when the market is trending down in the long term. So it gradually goes to cash, and the system that makes money when the market is going down is off when the market is going up, and when the market rolls over and starts going down, then it turns on, then it goes short and makes money on the way down. So the systems are in and out of the market based on their rules, and you design the rules to work over a long period of time.
How much would is how much would you think it costs if someone wants another person to create a system for them?
The challenge with getting someone else to create a system is you've got to give them the rules. I mean, so you might say to someone, "Look, code me a system in whatever software. I use Amy Broker or Realtest. So there's several different softwares you can use. Code me a system in Amy Broker that buys when it does this and sells when it does that and whatever." And they can do that. That's not expensive, but it may not work. You've got to. It's not as simple as just dreaming up some rules and coding them and expecting to make money. There's finding a good system takes a lot of effort, a lot of research, and so that takes time. So it's hard to outsource that. So you've sort of got two options. You either buy an existing system from someone else or you build it yourself. Now, buying a system from someone else might be, reading a book, finding a system from there, coding it up, testing it yourself, making sure it works. Buying a system might be doing a course like mine. And when I teach someone, I teach them a whole bunch of strategies, more than 20 different strategies, but then I teach them how to test and evaluate those strategies so that they can be confident that they actually work. It's not about trust me, it's about here's a strategy and here's how you test it so you know it works. So that's sort of the buy, get someone else's system or build it yourself, which means learning how to backtest, coming up with ideas, coding those ideas, running them through historical data, and working on ideas until you find one that actually is profitable.
But if someone, the reason I was saying that is because if the person is not too tech savvy, that's why I was saying
Oh, I
that.
see.
Yeah, so they could outsource it. But going back to what you were saying, if they have the experience, if they've touched several things before, they might have already an idea
Mhm.
of their strategy, and all they have to do is give it to the person, and the person does the
Yeah,
algo.
if you've got a complete strategy and you just want it coded up so that you can backtest it, that's actually not very expensive. I mean, depending on what language it is and where the coder is, I mean, it could be, you might be talking $50 an hour, a couple $100 an hour, but it's not going to be, and it's not going to be weeks of work. You might be paying a few $100 or $1,000 or something to get it coded, depending on how complicated it is. But a simple system, which good systems are typically pretty simple, it doesn't take a lot of work to code it up so you can test it.
And what about when you have your system and if it doesn't work uh, right away, so you're not making profit right away because people might be impatient. What would you say about that? Because sometimes it might take time for things to pick up depending on how the market is and all that. So what would you have to say about that?
Yeah, absolutely. So the most important thing is to really build confidence that the system works. And you do that by testing it for yourself, by pressure testing in different scenarios, by adjusting the parameters, by checking all of the individual rules actually contribute to the performance of the system. The whole testing methodology that I teach, that's quite involved, but it's all aimed at building confidence that the strategy works despite the ups and downs, so that when you start trading it, if you're in a dip, which can happen, then you have the confidence to keep following it until it comes out the other side of the dip and goes on to make profit. And then later on, it's not always smooth sailing. You have drawdowns. And so you've got to be confident to trade through the drawdown so you can come out the other side. And you also have to know when a drawdown is getting out of hand or when the behavior has changed, so maybe you switch off the system, and that's about monitoring the performance and making sure that it's in line with the historical sort of expectations that you've got based on your original testing.
What if you're doing live trading?
Well, I mean, that could absolutely happen with live trading. It does all the time. So, let's say I've got a whole lot of systems live in the markets. I monitor those systems on a regular basis, and if one of them is not performing well, I might do a bit of an investigation into it to see, okay, is the current performance in line with what I would expect? Is the current performance outside what has ever happened before, or is it kind of not, has this happened before? You're looking at the different performance statistics, percentage of winners, size of wins, size of losses, number of losses in a row, depth of drawdown. You're looking at all of the statistics to see, is this normal? And if it's normal and you're just in a bit of a drawdown, you just keep trading it. But if it's not normal and the system is degraded or something's broken or the market's changed, then maybe you might, if you do the work, you might take a decision to turn the system off and take your capital out of that system and give it to another one. And the magic, really, of systematic trading is that you have many such systems in the market. So let's say you have 10 systems. If one of them you turn it off because it stops performing over time, you've got nine more. And then you just take that capital and maybe you redistribute it, or maybe you put in a new system into your portfolio so that you can redeploy that capital.
Where can people learn more about you and follow you?
Well, if you go to enlightenedstocktrading.com, actually enlightenedstocktrading.com/free, if you go there, there's a opt-in where you can get a bunch of free trading resources to help you get started on systematic trading. There's two ebooks that talk about, one is how to build confidence in your trading system, exactly what we're talking about now. And the other one is about how to build a globally diversified stock portfolio with different systems for different markets, which is really cool. Great way to invest. There's 4 different cheat sheets to help you improve your trading right away. There's 2 different courses to start talking about the journey of systematic trading and show you how to go down that path. So I think that's probably a really great set of resources for anyone to start. There's no obligation. Obviously, it's completely free. But if you go to my website, you can get that. And then once you do that, then you'll have my email address and we can exchange, questions and comments and so on via email. So that's probably the best way.